We're just on crypto again, so I'm going to make this a quick one because I know a lot of you what are on this for sports trading are not bothered about it, but we have got a lot of members what do like it, so I do need to show it now and again. But what I'm going to show you is this calculator what we created, which I put out on the site for the crypto trading. The ladder leverage calculator. I've done one how it works, but I'll just quickly show you again what advantage what we have. So say you've only got a small account like $100 and you've taken a little trade on Bitcoin at minute, you're worried about it going down and you want to make a bit on the drop, because the thing is you need to buy when there's fear in the market. That's where people make the money. That's where traders make the money. When there's fear in market and everybody's selling off, that's when you need to look at buying in. There's a few ways you can do it. You can do it on a reversal. But a good one to do it is what they call psychological numbers. So with crypto, with Bitcoin especially, if you look at these psychological areas, they're like year-round kind of numbers, like 100,000, 101, 102,000, that kind of thing. And also when it were low, when it were like 75 and 70, them kind of areas. So what I'm going to show you is, I'm going to show you a worst case scenario first. Let's say you've done a ladder trade in, you've done some trades, it's 100 call it 102 at minute, and say you put a trade in at 102, and then you put a trade in at 101. So I'll just show you, so you can put them into here. So we've got a trade at 102 for $50, and we've got it leveraged. So we're making more on it anyway because we're leveraging it. Now, so that dropped and dropped and dropped and dropped. So you kept buying it on every psychological level. So you bought in at 102, and then it got to 101 area. You got a buy order in. So you can put it up by $10 each time. That's a good way of doing it. So you, like I say, first one was 50, this one's 60. Same leverage again. It's still dropping. It drops again. You're around about the 100 mark. So you're buying again. This time at 70. Same leverage. And then it drops again. 99. That should be 80 actually, that one. I did that one wrong, but it's I'll put that back in after. Never mind. Does the same job. So we carry on going down, and this is a really, really, really bad case scenario where it shows you. This is why I'm showing it you this way. So let's say it drops all the way down to 96. It's not very often that happens, to be honest, not very often at all. It will bounce back up at some point, and that's when you take some profit out. But let's say it just totally crashed all the way down and you bought in at these different prices. You'd still only be, because of the way you've done it, you'd still only be $13 or pounds or whatever you're doing it in a loss. It'll give you a total trade size, cost per 1,000 move. That means now for every 1,000 move it does, you're going to get 520 profit for each time. And your total margin what's used there. You've still got some remaining balance. It shows you that. It's ideal because you can see where we are. So you can put these in first to give you an idea how far you want to go with the trade or how much you want to spread it out. And you know how safe you are down to a certain point, which you can have a look at on these. So we've got a very big, well, big handle here to trade, and we're not much down. So that's what you want. But the good bit is after you've gone all this way down, what you need to remember, if it starts to go back up again, and it goes back up to where it originally were, you calculate in here, and it'll give you a good idea. So what you do is you put that in, you calculate, and it'll tell you how much profit you'll make if it goes back up to 102,000 again. So if you go way down, it'll show you each trade individually, and you'll be up, your balance will be up, and your profit will be up by $18. And it's up to you then, you can take some out, because if you have a look on it, it'll give you a rough idea how much each trade is worth, and you can decide if you're going to take some out on that one. What I tend to do is when it comes back into profit, I'll look at taking like either 25% or 50% out of the trade and leaving some in for if it carries on going up, and if it comes back down again, we just do this all again. So yeah, that's where this calculator's ideal, because it lets you predetermine what you're going to do. Because if you just carry on putting in trades here, you're going to start panicking and your balance is going to get lower and you're unsure. If you put it in here, you know exactly how much. Well, give or take, there is fees and everything, but it's near enough pound for pound, dollar for dollar. And it gives you an idea what you can go down to. So yeah, it's ideal. So I just thought I'd show you that. It's an ideal little tool. We've got it on the site if you like your crypto trading, and I'm doing really well with it at the minute. It does help. Like I say, if you keep taking bits out, you can build that balance up. Right, I'll leave it at that. Not waffle on too much and get on with my trading.